You're here because you want to scalp the market 5 minutes at a time, believing you'll carve out your fortune in these razor-thin windows of opportunity. Let me tell you something right from the start. The market doesn't care about your strategy, your charts, your fancy indicators, or your desperation for quick money. It has one loyalty to its own nature, and unless you learn to respect that nature, it will treat you like a child who wandered into a lion's den with a piece of meat strapped to his chest. But if you understand how price behaves, if you understand yourself, if you master risk like a surgeon with his knife, then yes, you can pull money from the market in minutes. I've pulled millions over years. I've also lost millions because of foolishness, so don't mistake confidence for carelessness. I've seen both sides of the blade, and if you're smart, you'll learn from both. Now listen carefully. People believe scalping is fast money. They think it's instinct and speed. They think it's the Wild West of trading, shoot first, think later. That's why most scalpers get wiped out faster than a candle melts on a fire stove. Scalping isn't fast money, it's fast discipline, fast patience, fast execution, and above all, fast risk control. If any one of those fails, you fail with it. A 5-minute chart might look small and harmless, but inside those candles lives the same psychology, the same fear, the same greed, the same uncertainty as every other time frame. The emotions are simply compressed, condensed, intensified. A mistake on a daily chart takes hours to play out. A mistake on a 5-minute chart punches you in the jaw before you can even exhale. That's why I want you to understand the truth before you begin. When I traded, I didn't have your monitors or your indicators. I didn't have your live feeds or your automated charts. I had the tape. Price. Pure price. That was enough. It still is. Price will always be the cleanest information source available to you. The problem is that most traders don't know how to read it. They think they do, but what they're actually reading is their own emotion painted onto the canvas of the market. If you're going to scalp, you must learn to strip your emotions away. Every candle, every move, it means nothing until it means something. Don't guess. Don't anticipate out of boredom. Wait for the market to reveal its intention. 5-minute scalping requires the patience of a sniper who may wait hours for a single shot. And when the opportunity comes, he doesn't hesitate. He doesn't overthink. He fires. Now, let's talk about the strategy, not just the mechanics, but the mentality behind it. Because the truth is, the strategy is the easy part. Anyone can draw lines and call them levels. Anyone can follow an indicator. Anyone can claim victory after the fact. The skill, the real skill, is managing yourself while the trade is alive. Here's the structure you'll use, and I'm going to break it down to the bone. Trend direction, key level, confirmation, execution, and exit. 5 components, 5 decisions. 5 chances to stay disciplined or behave like a fool. Start with trend direction. I don't care how clever your idea is, if you trade against the trend on a 5-minute chart, you're throwing yourself into a river counting on the current to change for your convenience. That's not discipline. That's delusion. Use the 15-minute or the 1 hour to determine the overall movement. Determine whether the market is trending up, trending down, or sitting flat like a bored mule. In a flat market, sit on your hands. The best scalpers don't scalp all day, they wait. Waiting is a position too, and often the most profitable one. Once you see your trend, mark your key levels, support, resistance, liquidity zones, order block areas, wherever you see price reacting sharply. These levels are not magic, they're psychology. They're places where traders commit mistakes together. Fear gathers there, greed gathers there, and that's where you strike. But only when you have confirmation. That's the part most traders skip because they're afraid of missing out. They see a level and they jump in like gamblers on a losing streak. You need a reason, a real reason to enter, a shift in market structure, a rejection wick, a micro pullback, an engulfing candle, something that shows you the crowd is leaning the same way you want to lean. Then comes execution, and this is where your discipline gets tested. Once your setup forms, pull the trigger. If you hesitate, you will miss the move, and then you'll chase it like a dog chasing a cart. And when you chase, you always enter late. When you enter late, you always set stops wrong. When you set stops wrong, the market always teaches you the lesson the hard way. Execution must be decisive, clean, and controlled. But the most important part, the part that saves your account when everything else fails, is your exit. The exit is where amateurs reveal themselves. They hold too long, hoping for more. They cut too early because they're afraid. They widen their stop loss because they can't admit they're wrong. And once you widen a stop once, you'll keep doing it until you blow the account entirely. Your stop loss must be placed at a logical point where your idea becomes invalid, not convenient, logical, and your take profit must reflect the structure, not your greed. 1 to 1. 1 to 2, that's enough. You're scalping, not fishing for a generational trend. Listen, I've watched traders rise and fall. I learned early that the market rewards the disciplined and annihilates the impulsive. You're not rewarded for brilliance. You're rewarded for consistency. Your job isn't to predict the market. Your job is to make decisions that keep you in the game day after day. Let me tell you a story. There was a time I watched a perfect setup forming. Everything aligned: the trend, the level, the volume, the confirmation. It was as if the market had scripted the trade for me. I entered, and within seconds the price moved in my favor. A clean move, beautiful, rational, obvious. But greed whispered that I should hold for more, that I should squeeze the market just a little extra. And so I held. 5 minutes later, the move reversed so fast it felt like someone slapped the profits out of my hands. I ended up closing in a loss. The mistake wasn't in the analysis. The mistake was in my greed, believing I could demand more from the market than it was prepared to offer. When you scalp, take the meat of the move, not the bones, not the tail, the meat. Another time, I watched a losing trade drift against me. I told myself it was just a pullback, a temporary dip. I convinced myself that holding was the smart thing to do. But in truth, it was cowardice. I didn't want to admit I was wrong. The market doesn't punish you for being wrong. It punishes you for refusing to accept it. Every successful scalper learns this truth. Your win rate matters far less than your ability to cap your losses. You can win 40% of your trades and still grow your account if your losers are controlled and your winners are clean. But if you let one loser run wild, it will destroy 10 winners without breaking a sweat. Now let's talk about the emotional side. Because scalping exposes your psychological weaknesses more brutally than any other form of trading. There's no time to think, no time to journal your feelings, no time to meditate your way out of fear. You must be prepared before the market opens, not during the heat of battle. If you come to the charts tired, greedy, angry, pressured, or desperate, you're dead. Scalping amplifies your state of mind. A calm trader becomes precise. A fearful trader becomes chaotic. A greedy trader becomes reckless. A tired trader becomes sloppy. Most people don't fail because of strategy. They fail because they refuse to master themselves. Scalping demands self-control at a level most traders never develop. But if you do, if you learn to detach emotionally from each trade, to treat each position like a soldier on the battlefield and not like a lottery ticket, then you can carve profit from the smallest movements in the market. Let me teach you another lesson. The market always gives clues before it moves. The problem is that most traders are too impatient to watch for them. On the 5-minute time frame, the clues are subtle but consistent. Price will sweep liquidity. Price will test a level twice. Price will build a small range before breaking. Price will leave rejection tails before reversing. If you learn to read these behaviors, you'll enter before the crowd. But the moment you assume, you've already lost. Every scalp must have 3 things: a reason to enter, a reason to exit, and a risk you're willing to pay. If any of those 3 are unclear, keep your money in your pocket. Let's talk about the mindset of survival. You may think survival sounds weak. You want victory. You want money. You want speed. I understand. But survival is the foundation of every long-term trader's success. Many traders have a hot week. Some have a hot month. Very few last years. And do you know why? Because the market isn't a place you beat. It's a place you endure. The winners aren't the ones who make the most in a day, they're the ones who avoid destroying themselves. Think of a lion. It doesn't hunt every minute. It conserves energy. It waits. It studies. And when the right opportunity comes, it attacks with everything it has clean, confident, and efficient. That must be your blueprint. Now here's the structure of the 5-minute scalping method in practical form. Identify the trend on the 15-minute or 1-hour chart. Only scalp in the direction of that trend. Mark key levels, previous highs, lows, supply zones, demand zones, liquidity pools. Wait for price to reach one of those levels. Look for a confirmation candle, a rejection, engulfing, break of structure, or micro pullback. Set your stop loss tightly at the invalidation point. Target a logical take profit based on market structure. Exit without hesitation. That's the skeleton. The flesh is the discipline behind it. Many traders lose because they keep searching for the Holy Grail, but the real Holy Grail is self-control. The real Holy Grail is the ability to watch the market move without feeling compelled to trade. To take one good trade and walk away. To protect your capital like a guard dog protects its master. In my time, I saw traders gamble their fortunes away because they believed they could outsmart the market. They believed they could outmuscle it. They believed they could outfeel it. They were wrong. You cannot overpower the market. You cannot negotiate with it. The only thing you can control is yourself. Your strategy must be simple enough to execute without thinking twice. Complexity breaks under pressure. Simplicity survives. Let's talk about revenge trading, because this is where most scalpers burn themselves alive. You lose one trade, fine. That's part of the game. You lose 2 trades, you tighten up. But some of you start feeling insulted. You take the loss personally. You start trying to win your money back immediately. And that is the moment you hand the market your entire account. The market never owes you a win, because it never stole your loss. Every loss was your choice, your responsibility, your mistake. Accept it, study it, and wait for the next proper setup. Another lesson: the best scalps come after liquidity sweeps. When price takes out a high or low to grab liquidity and then reverses sharply, that's your cue. That's where you'll find your cleanest trades. The market clears the table before it serves the meal. But even then, even with the perfect setup, never risk more than you can tolerate. I don't care how good the trade looks. I've seen perfect trades turn into catastrophic losses. If your risk is too high, you don't have a strategy. You have a bomb waiting to explode. Now, listen carefully to this. The goal of a scalper is not to win big. It's to win consistently. That requires humility. Humility to accept small gains. Humility to take small losses. Humility to avoid trading when conditions are unclear. Most traders fail because they try to force the market to give them what they want. The market gives nothing. It only responds. You must respond with it, not against it. The trader who lasts is the trader who adapts, who studies, who listens, who evolves. 5-minute scalping is not fast money. It's fast learning, fast adjusting, fast correcting. And yes, you will make mistakes. Everyone does. But the question is, do you learn from them, or do you repeat them until your account is dust? I've repeated mistakes in my life that cost me millions. The pain of those mistakes taught me more than any victory ever could. Now let me give you one final truth. The market reveals your character. If you're undisciplined, the market exposes it. If you're greedy, the market punishes it. If you're patient, the market rewards it. If you're humble, the market respects you just enough to let you survive. Your 5-minute scalping success will depend on what kind of person you become, not what strategy you use. Build discipline like a brick wall. Build patience like a monk. Build risk management like your life depends on it, because in trading, it does. Take this strategy, refine it, practice it, but don't rush it. Don't expect the market to bend for you. Respect the market and it may bless you. Disrespect it and it will bury you. This game isn't about speed. It's about precision. It's about consistency. It's about knowing exactly who you are every time you enter a trade. And if you can master that, 5 minutes is more than enough to change your life.